got some attendees coming in straight away. Thank you very much for joining us this lunchtime. Today I've been extremely poor. Those of you that regularly join these sessions know that normally I've had my lunch by now or so, take it early, but I haven't today. So yeah, a little hungry as I start this over here. But hopefully it should be a brilliant session that Emma has for us today on bridging. It's definitely the topic of the day for us bridging, or topic of the month, shall I say, for us bridging here at Knowledge Bank. There's a lot of work that we're doing around the bridging criteria it's going to impact and hopefully be beneficial for all our brokers and lenders as well. So it's a really good timing for that. I'm going to get a poll question out straight away as people are joining, give you a chance to answer this as you are taking your seats. But we've got the first one over here. Are you having to find more or different products to suit your clients' requirements? Okay, so are you having to find more or different products to suit your clients' requirements? Just launch that poll for you now. And if you can answer that as you're coming in, answer that, get that across to us, and we can hopefully look to make sure, I suppose, that this is set right for the audience and everyone is getting as much offer as they can. Hopefully what Emma's going to discuss from MFS goes to aid and put you in a better position. Thank you so much, everyone that has sent in your pre-registration questions. Really appreciate those. I've been looking over those and some interesting areas and interesting questions that I'll be posing to Emma today. So thank you very much for sending those. If you didn't send anything in, or if indeed you didn't think of a case at that point, it's fine. It's fine. We've got the Q&A option. We've got the Q&A button at the bottom of your screen, so you can send through any questions that you have, any questions that you want, whether that be a case that you've literally got on the desk and you're looking to place, or whether that be any aspect of criteria around bridging, around buy-to-let, anything that you want to discuss, you want to pick Emma's brain on, this is your time. Okay, so send that across throughout the session today. I will be bringing those up for Emma to answer and get back to you today. So please, please, please do use that, and let's make that interactive so that everyone can get the most out of it that we're looking for. But without further ado, thank you very much for joining us. I'm Shane George, I'm a sales director here at Knowledge Bank, and I'm joined today by Emma Jones from Market Financial Solutions, who will be providing us with a presentation on the Fusion product and talking about how this can help your clients in those scenarios or situations where they're looking to maximize the best and the most they can get out of a property, out of an investment that you are working with them on. Hopefully relatable and apt in this marketplace that we're in right now. I think MFS are renowned for that, very, very forward thinking, react very well to the market. And I think with this product, I think they've done that again. But without further ado, over to you, Emma. Thank you for joining us this afternoon. But yeah, the floor is yours.
Okay, thank you. Right, okay. Just gonna share my screen with you.
Perfect, thank you. Whilst you're setting that up, I will close the poll that we have whilst you're getting that ready. And the question that we had asked you was, are you having to find more or different products to suit your clients' requirements? Answers are in, and we had just 17% saying no.
Okay.
Which leaves 83% saying yes. So, like we're just discussing in this pre-live, isn't it, that it's a big thing with today's market.
Yeah, no, definitely. I mean, it's still, even though I think the market is definitely picking up in comparison to where it was last year, it's still not without sort of its problems and its issues. And I think, as lenders, we have to evolve with investors and clients and brokers' needs, really. We're here to lend, and if we want to lend, we have to change, don't we? We have to change your product to suit the market and people's needs.
Yeah, no, exactly. Definitely. It's about being on that front foot, isn't it? Like say adaptation in the right way, to make sure that it's right. I think we see a lot, and maybe perhaps too much, dare I say it, where clients and brokers are having to adapt what they do to fit the products that are out there. Now they have to change this, change that. And it often means, speaking as a broker previously, it often means dashing a client's dreams, their goals, and say, no, come back to me when you've done this, or come back when this has happened, which is what we're seeing. So great to be on the phone for like MFS have been with this.
Yes, yeah, no, definitely. I think it is, isn't it? You know, it's not necessarily a job for the broker to do, or the client if they're in a situation where, you know, they're ready to move forward with investments and things like that. We have to make it easy. You know, obviously it's not going to be without sort of issues. We've got compliance and things that we have to adhere to. We have to make sure that we're responsible lenders. But, you know, it's not easy out there. The climate still isn't that great. So, you know, we have to adapt to that.
Great stuff. Great stuff. But yeah, over to you to take us over this presentation, Emma.
Okay,
Thank you.
thank you. Okay, so I am going to talk to you today about our new product, Bridge Fusion. So it's quite an exciting product. What we've done is we've sort of combined the best aspects, I can't speak today, of our bridging and our buy-to-let products. So as a lender, we've realised that there was a gap in the market, and that a lot of borrowers, a lot of investors are looking for medium-term products. They have sort of a wait and see approach at the moment. They're optimistic about the future. They're, you know, we're expecting rates to come down. We're expecting appetite to normalize, and they sort of, you know, want to wait until that happens to be able to sort of, you know, commit to long-term deals, which makes sense. But at the same time, they don't want to stand still. There's lots of opportunities out there for investments, and, you know, they don't want to miss out on that, which is completely understandable. And I think this is very much where Fusion fits in. So I move on to the next slide. So how we can help and what our criteria is. So if anybody wants to download our bridging criteria guide, there is a scan in the right-hand corner. But what's the criteria for this product? So we're looking at a minimum loan size of 100,000 going up to a maximum of 20 million. Maximum LTV, we're looking at 75%. That's going to be on your sort of standard buy-to-let residential. If we're looking at mixed use and commercial, it will be 70%. This product offers a longer term, so not only does it give you flexibility in the fact that you've got the option of extending the term by 12 months, but again, it gives you that peace of mind while you're waiting for the market to sort of stabilize that a little bit more, that you've got that longer term there to help with whatever the reasons are that you're looking to take the product out for. All property needs to be in mainland England and Wales. There's no ERCs on this product either after 20 months. If you're familiar with our buy-to-let product, then you know that we can defer and we can roll up interest, which helps when we're looking to get the maximum loan size for clients. And this is something as well that we can do in this product. So we can defer up to 2% for the 2 years, and also we can roll up the first 6 to 12 months interest as well. So it gives lots of opportunity there with regards to sort of, you know, tailoring the product to the client's needs.
I'll come in with the second poll question now. Actually, I think it feels like it's a good time. And the second poll question is asking, do you feel confident talking about roll-up and deferred interest with your clients? So I'll just launch that now for the audience. So if you can, please answer that question. And Emma, I'll let you carry on and I'll come back in with the results for that one.
Lovely, thank you. Okay, so who is Fusion for? So it's been designed to lend to a range of applicants where they're looking to purchase properties. So we've got sort of a list of the complex properties on the left-hand side that we're able to lend on. So large property blocks, large commercial assets, student accommodation, warehouse, light industrials, retail, shopping malls. I know with talking to my colleagues prior to this, we've got a couple of shopping malls that we're currently doing deals on. Offices, medical, clinics, hospitality establishments, petrol stations. Again, this is something that we're dealing with a lot at the moment. Borrower wise, again, you know, depending on the circumstances, there's not a huge amount that we can't lend to. So, you know, we can offer this product to limited companies, individuals, you know, if they're first-time landlords, we're able to lend to them. LLPs, SPVs, SIPs, we can lend to. Also trusts, offshore companies, foreign nationals, expats, they don't need to have that UK footprint. So again, there's lots of sort of opportunity there with who we can lend to. Just with regards to sort of this product itself and sort of the sort of borrowers that we would expect to see taking up this product, it is very much those sort of cautious borrowers who've got that wait and see approach where, you know, like I said previously, don't necessarily want to tie themselves into long-term deals. They want to sort of wait until things start to normalise. If we've got sort of landlords that are looking for larger loans, so anything 3 million plus, very much this product that it would fall through into. If you've got clients that have got sort of, you know, renovation products that are going to be long term, that are going to sort of take that little bit longer than maybe your standard 12 months, again, this very much sits in that sort of area. The clients do need to have a sort of exit strategy. So again, it can't be sort of somebody wants to do X, Y, and Z with not really thinking it through, because the product is only for 2 years. Obviously, you've got that sort of extra 12 months there, but we need to make sure that, you know, they've got a good plan in place and they know what their plans are with regards to the property. Established businesses as well that are vacant. So, you know, if you've got somebody that's looking to purchase it, kit it out, then they're looking to target specific tenants, then again, this product is for them. And in doing that, it just means that, you know, they are going to increase the value within those 2 years, and then they're going to be able to have more options with refinancing. And the same again, you know, I've just mentioned it, first-time commercial landlords. So, you know, they can sit on this product for 2 years, they can get that experience, and then when it expires, they will have a lot more opportunity available to them when it comes to the end of the deal.
Great stuff. I've got the results in for that
Oh,
poll.
yes. Okay.
So the question was, do you feel confident talking about roll-up and deferred interest with your clients? And we can say that 27% don't feel that
Okay.
confidence with it, with 73% feeling that they are comfortable with how that works.
Okay. I would say to that, you need to get in touch with your BDM. You need to get us to come out and speak to you and explain it to you. It's not the most easiest thing to get your head around, but equally, it's not as complicated as it feels that it is. So I think once you understand it, it is quite easy to explain, and we've got a really good slide as well that we use, and I think we've used it previously in presentations with yourselves, that really sort of help demonstrate the difference that it makes in sort of structuring the loan with deferring and rolling up. So anybody that's not confident, just get in touch with us and we can come out and we can explain it to you.
Great stuff. Thanks for that.
Okay, so where does Fusion fit in? So I'm going to run through some data that we've got from the EY UK Bridging Market Survey for 2024. So the first bit of information we're going to look at is what are the 3 biggest challenges for the business at the moment. So 30%, which I don't think is any surprise, 30% is higher interest rate. So I don't think that's a surprise at all that that is coming up first, because it is proving to be challenging. Not just with regards to getting loans through and being able to get the amount that people want to borrow, but also just as well from borrowers' expectations. They're sort of seeing that they are that little bit higher and deciding maybe not to go ahead with deals, where if they were a little bit lower, the appetite might be there. 28% voted increase in defaults. And again, I can't see really that surprising. Obviously, those higher interest rates are having a knock-on effect on sort of, repayments, whether it's mortgages, whether it's rental income. We are seeing a lot of people using revolving credit now. So credit cards, overdrafts are being used a lot more than previously. I mean, we're still in the middle of sort of the cost of living crisis. Bills are still quite high. Your food bills are still quite high. I mean, we're seeing a huge increase as well on food banks. So something that's not surprising, but hopefully will sort of, get better over the coming months as we sort of see these predictions in interest rates decreasing, fingers crossed, actually happening. And the third one is political uncertainty. And again, I think, when I've done these things previously, this is something that has been coming up as a major concern. So, you know, once we get Thursday out of the way, which I think we will all be relieved by, hopefully we'll see things starting to settle down again off the back of that. So moving on to the next box, what do you see the biggest challenges for the business in 2004? So we've got 23% voted loan performance as the most important challenge. It also came in as third as well, with 18% voting for that. And 27 people voted the ability to access flexible and effective debt funding sources was sort of the second most important. So when we were looking at this survey, within the information, it did say that lenders are sort of currently investing quite a lot in technology. So it's something that they're conscious of, but also that they are prioritising increasing product diversity as well. So hopefully that's something that we will see sort of starting to come to the market a lot more over the next couple of months. And also, they're starting to invest a lot more in AML systems, so helping reduce sort of fraud risks in the sector as well. So there's a lot going on in the background that maybe that we're not aware of, but will hopefully, you know, have an impact and affect the market going forward. And then the third one is just looking at sort of two questions. There must have been a couple of questions, but just looking at sort of what would be the main priorities. So the ones that have come up the most in this poll is 50% stated that speed and efficiency was the most important when taking a loan, a bridging loan with a lender, and also the lender's reputation as well. I can't say that. My words are not coming up properly today, are they? Was also something that was important to them. So following on from that information, where do we fit in as a lender with this particular product? So the good thing is that it offers flexibility. The rate is a tracker rate. So again, you know, as we're expecting to see these reductions in base rate, it means that it's going to have an impact on clients' payments. But also as well, they have that inflexibility where they can extend the product by an extra 12 months. Speed. So we're very good at being able to work within a client's time scale, especially if it is time sensitive. We're very good with sort of purchasing of auction properties, those sorts of things. So anything that needs a quick turnaround, we can definitely help with. Initial inquiries need to be answered as well within 4 hours. It's a 4-hour turnaround to get those inquiries out to you. So, you know, we are very geared with regards to sort of making sure that the service is smooth and that it's speedy as well. Transparency. So our underwriters will start sort of underwriting the products from day one. So the more information that you can get across to us in that inquiry, the easier that it makes. And it just means that we're not hiding our rates, we're not hiding fees, anything like that. We're being very transparent. And when we're sending that information out to you, it will be as accurate as it can be with the information that we've got. And also, we are a team of experts, even if I say so myself. So as a lender, we've got, we've been trading for 17 years, so we've got a vast amount of experience. But also, you know, my colleagues and myself, we have been in the industry for years. I don't think I'd like to add up how many years altogether. But, you know, we are experienced in what we do. So hopefully, if there is anything that we're ever needed for, we are able to help. So looking at a scenario, so we've got a property valued at 400,000 and the client is looking for an LTV of 60% and expected rent is going to be £2,000 per calendar month. So the inquiries come across, borrower is inquiring about refinancing with capital raising for a light refurbishment project. They're looking for ways to maximize cash flow while the work is being carried out, and it's likely to take up to 12 months. The exit plan is to refinance onto a long-term buy-to-let product, and they're hoping, the plan is that the 2 years, within the 2 years following the project completions. So we've got a comparable here against sort of our bridging and the fusion and how it really fits and the difference that it makes. So as you can see, the rate per annum is a little bit lower on the Fusion. Gross loan has come out exactly the same, but because that interest rate is a little bit lower, it means that we can increase the net loan. Term has come out exactly the same, 24 months. On both products, we're able to roll up the interest rate. We're going to assume that there's no ERCs because they're going to repay us at the term end. But if you look at the interest that's charged over the term, it is lower on the Fusion. So if you've got somebody that's looking for a long-term solution as opposed to sort of something that's short-term, then this is very much where the Fusion fits in. So if I move on to scenario number 2. So we've got a property that's valued at 3 million with an LTV of 70%, or they're looking for an LTV of 70%, and the market rent is going to be 12,000 per calendar month. So the inquiry is that the borrower is looking to purchase a vacant commercial asset with 3 commercial units. They're looking to roll up the first 12 months of interest, and they want a 2-year loan. Because they're looking to do works for the property, and it sort of fits within that time frame. Their plan again is to refinance onto a long-term commercial mortgage once the commercial lease is in place. So again, there's lots of things that are going to be going on in the background to get the property to where they want it to be able to get it onto a longer term refinance product at the end of the 2 years. So again, we've got the comparable table where we're comparing it against the bridge. So we've got an interest rate of 13.65 per annum on the bridge, 11.70 on the Fusion. So again, it's that little bit less on the Fusion. Gross loan has come out exactly the same, but as you can see, the net loan is quite different. So we can lend that bit extra on the Fusion in comparison to the bridge. On the for the point of sort of doing the comparable, we are looking at a term of 24 months. We're rolling up the interest on both of the products. Again, we're assuming that it's going to get paid within the term end, so there's no ERCs. But again, you can see the difference in the total interest charged. 491,400 to 573,300 is a big difference. So again, if you've got a client that is looking for something that is going to be sort of more long term, then definitely the Fusion is the way to go. So as you can see in front of you, you've got the details of our bridging product and our buy-to-let product. So what we've done, as we said at the beginning, we've taken parts from both of these products to give us the bridge Fusion. So if I click again, we've got the commercial then that comes up. So the commercial term again is very similar to the buy-to-let product. It's set up in exactly the same way where we can defer, we can roll up. It's got the 5-year term. You're tied in for the first 2 years. And the bridging is very much for short-term lending. But the Fusion comes in just between the buy-to-let and the bridge. So the main difference between the bridge and the Fusion is just the fact that we can defer that interest again. So, when we're looking to maximize loan amount, it is very much the product that you want if you want something that's going to be a longer term as opposed to sort of short term. And I think, if you've got something that isn't going to sort of look to be refinanced in 3, 6, maybe 12 months time, and you can stay within that term of 20 months before the ERC comes out, then, Fusion is definitely where you need to go. So just with regards to sort of our products, there's lots of things that we can look at. So, we've touched on residential buy-to-lets, we've touched on buy-to-let, commercial, semi-commercial. As I've already said, we're able to look at sort of auction properties. We can do those larger loans as well. With regards to sort of our bridging, we are able to do permitted and light development, and we've also got a second charge option there as well, which helps with sort of funding for different projects, and a development exit as well. So there's lots of opportunity there, lots of ways that we can help brokers and their clients. So just with regards to sort of the standard bridging criteria, because we have done those comparables there. So first charge, minimum loan size is 100,000 going up to 50 million. Again, maximum LTV is 75%, unless we're looking at sort of mixed use or commercial, then it will go to 70%. Term, we can do 3 months up to sort of 24 months. So again, it will just depend upon clients' appetite and what it is that they're looking to do. Again, property needs to be based in mainland England and Wales. There's no exit fee with the product either. And again, just with regards to sort of how we structure the interest will depend upon the client, what they're looking to do, their affordability, and making sure that we can maximize the LTV that they're looking for. Second charge we can offer, on mainland, their main residence as well, not just investment properties. So just as long as they're using the funds for business purposes, it is another option that we can offer. So minimum loan size is 100,000 going up to 5 million. Maximum LTV on that one is 70%. And again, the loan term is quite similar. It needs to be in place for a minimum of 3 months, but we can go up to a maximum of 21 months. And there's no exit fee either with that product. And then if anybody has any questions, then please do let me know. But also, you know, we've touched on getting in touch with your local BDE. There's another little scan box in the corner there, which if you scan it will give you the map and will let you know who your BDE is for your particular area and their contact details as well. So if you're not already in contact with myself or one of my colleagues, please do scan it, because it's definitely worthwhile getting us out and having a chat to you about our products. But that's it.
Great stuff. Great stuff. No, thank you very much for that. Really good presentation. I've got a few questions. Yeah, I've got some questions on the pre-reg. And again, for those of you watching, if you've got any questions, do ask away, send them through the Q&A. Hopefully, some of the questions I'm going to go over now will jog and kind of give you an idea of some questions that you want to ask yourself. But let's get started with some of these pre-reg. One of the questions that we had asked is, what would you like to see from MFS? You know, what would the brokers like to see? And the first thing over here is talking about hotel finance. So I suppose when you look at the commercial aspect and what's allowable on commercial, does that fit within there? And then when we then bring in the fusion element, can that work? Can someone do a hotel under fusion within that?
Yeah, it is something that we can now take a view on. So if you've got any inquiries like that, get them across to us and we can get an underwriter to look at them.
Okay. And then with that on commercial, whilst we're on commercial, just to build on that, are there any kind of limits, anything that are absolute no-nos? I don't know, we won't do petrol stations, or we won't do anything where you can pray, where there'll be children. Like, where does it sit for MFS?
We can now look at school type buildings where we weren't able to before. We can look at hotels, we can look at care homes where they are owner occupied and take a view on those. Very much that we can take a view once we've looked at the overall case, as opposed to it being a straight yes or no. We can't really lend on churches. That's not something that we tend to have an appetite for. But most things, you know, it's worthwhile having a chat and getting them across to us, because there are a lot of things that we can take a view on. And as I've just mentioned, those couple of properties that we weren't able to lend on before, it's something that we can lend on now. So as I said in the presentation, we've got a couple that are going through for shopping malls. We've got a couple where we're looking at petrol stations as well. So, you know, we're sort of always looking at the inquiries that were coming through and things that we can't help with, but then looking at ways that, you know, we can move that forward and change it.
Yeah, perfect. We do have, for those of you who are watching again, we do have MFS on Notify. So you'll see that when you're using our system, when you're on the platform Knowledge Bank, you will see MFS come up for Notify. So anything where they are yes or condition, exception, refer, do engage with them, add them onto Notify, send it across, and then they do get that. The different BDEs do get that case in front of them. They can look at it and they'll reach out to you and talk to you about that case as well. So it's another great way to test them out when you give them all that criteria within that.
Yeah, definitely.
Again, looking at the pre-reg questions, there were a lot of questions around credit.
Okay.
You know, around credit, adverse credit, or what's in the background. It's one of, when you're looking at buy-to-let, one of the more popular questions that we see on the system, in and out of the top 10, but it's not a problem to see it a lot more on Resi, but certainly we do see it on buy-to-let and bridging. So how do you look at adverse credit, again, with Fusion in line? Any adverse credit, any missed payments, any mishaps, how are they looked at?
We can look at adverse. It's something I, like myself, I know I've seen a huge increase in adverse inquiries coming through. Depending on what the adverse is and the amount and when it was registered, when it happened, will sort of determine what product that we can look at. So I think sort of in those circumstances, if you've got something, then, you know, get in touch with your BDM, your BD, and we'll be able to see how we can help. But, you know, going back to sort of February, I had a case that we were able to help with on a buy-to-let where there were missed mortgage payments in the December and the January, and we were still able to offer a deal. You know, we can look at defaults, we can look at CCJs. If maybe the amounts are too much for the buy-to-let, then what we can do is offer the bridging product. Anything that's outstanding will need to be satisfied on completion. But then with 6 months of clear history, we can then look at, you know, going back onto the buy-to-let. So we will very much try and work with brokers and their clients to come up with a solution that is going to help them, you know, as opposed to maybe just not really doing a lot and, you know, the situation getting worse as opposed to improving.
Yeah, yeah, great stuff. And I'll stay on the same course with that, you know, when I'm thinking about the searches that brokers are doing, which again reflects in there's pre-rich questions, age of applicants over years. So we're seeing a lot of people having to go for extra long terms, and we're seeing some landlords, I don't know, decide to hold on to their properties longer than they initially planned. You know, they're working, they still need that income because they're still in their main house, etc. There's loads of different reasons why you might see people stay on and have properties. Other people are looking at making that income. So they're drawing down their pension. They want to create an income within properties. So they look at maybe Bridge Fusion to have that. So how do you work in terms of maximum ages? But I also think it's worth mentioning minimum ages, and if people are looking to be extra, applicants looking to be extra creative and maybe add children, trusts, kids, etc. on the applicants who can talk about the whole piece would be great.
So generally, we will lend from 18 up to 75. We do have one credit line that will lend to clients into their 80s. So it's something that would need to be done on a referral basis. But if, say, we've got a couple of applicants on an application, and one of them is sort of in their 70s, then we will always go by the youngest person on the application. So again, you know, if maybe you've got a limited company with a couple of properties and, you know, you maybe want to start moving them over to children's names, those sorts of things, then again, we can go off their age, and it very much helps with getting the applications through.
Yeah, absolutely love it. Absolutely love it. One of the questions that we saw, which is difficult to put into a question really, but it's you mentioned it in the presentation though, is flexibility. You know, it's flexibility. That's what something that a few of our attendees today wanted to see when asking what do you want to see from lenders. A lot of them flexibility. We want to talk about this, we want to talk about that. But it's really good as you answer these questions. I think if you're being cynical, you might say, oh, there's a lot of gray, there's a lot of we'll look at, but I think for me that's bridging, you know, and that's a challenger lender, as it were. Challenger bank is someone who does work in that gray, and things can't all be black and white. There is some to give you guidance, 18 to 75, but if there's something older, come with a chair, come with a chair. Let's do that, which is hopefully seeing that great flexibility that brokers need.
And I think the sort of things that we like to deal with are more complex. So they're not going to sort of be that black and white. There will be a lot of grey areas to them. And I think, you know, that is very much the beauty of us, where we can, you know, our underwriters will sit there and they will take a common sense approach to it. And they will deal with that case on its own merits, as opposed to the fact that, you know, they're going through a tick box and there's one X and no, we can't do it. We'll very much try our best. And if, you know, a client is looking to do something, but it turns out that maybe we can't do that, but there might be another option in the background, we will very much try and offer that as well as another option. So, you know, as a broker, I think you can be quite confident in the fact that we will always try and help and come back with a solution. So at least for you, when you're going back to your clients, you can give them something as opposed to it just being a simple no. You know, I think being a broker myself, you know, that definitely helps when you're trying to build those relationships and retain those clients for sort of future business.
Yeah, yeah, no, definitely, definitely. Level of works. So what level of works are we talking about on Bridge Fusion? So if someone does need to do a light refurb, I think it was case study one was talking about light refurb. So what level of works are allowed within Bridge Fusion, and well, what constitutes light refurb to heavy refurb as well?
Um, we're not a huge fan of sort of heavy refurb, anything that's structural. I think the general rule of thumb is that the cost of works need to be sort of around 25%, 30% of the LTV. But then again, it's not to say if it's a little bit out, we can take a view on it. So again, it's one of those that it's always worthwhile picking up the phone and having a chat with us.
Yeah. Okay. Excellent stuff. And I was just about to, well, I suppose the following question to what level of works is the timescales for the works. Is there anything where you maybe put a gauge on that and you want it to, works must be done within the first 3 months, first 6 months? Is there anything on that, or is it as long as they're paying them the amount, they're fine?
I mean, on the Fusion, because of the fact that we've got that longer term, and one of the sort of elements is that, you know, those longer projects. So there's not too much of a sort of restriction on that. I think if we're doing a bridge, because it is designed for shorter lending, we would prefer for the works to be done sooner rather than later. But again, you know, we always ask for a schedule of work. We always want to understand what needs to be done, and then it's something that we can take a view on. So it is very dependent. I'm sorry, it's another wishy-washy answer.
No, that's fine though. But again, sometimes that's what you need, isn't it? It's not going to be every client's
Yeah.
going to go on this in every case. There'll be time to time when you do need that little bit of
Yes. Yeah.
the wishy-washy, as it were, so you can press the underwriter for the answer that you're looking for, can't
Yeah.
you?
Yeah, exactly.
Um, Term extensions. So it's 24 months for the Bridge Fusion. You've got 20
Yeah.
months where you've got an ERC.
Yeah.
I saw that 20 month with an ERC, and that's a 3 month basis, isn't it? So it's 3 months of monthly
Yeah.
payments. And then obviously that 4 months. So in today's age, I met with a couple of brokers just yesterday, talking with them, and they mentioned just the amount of change of lenders they're having to do, amount of times rates are moving elsewhere, so they're having to move one client onto another, to another, to another. With Bridge Fusion, if someone is within that 2 years, they've done their work, they're ready to now move on to a standard product. If they need to extend for any reason or another, how does that work?
So the standard fee for bridging and Bridge Fusion is going to be 2%. If we're looking to extend, it's only going to be 1%. There will be some checks. We're still going to need to sort of do a credit check. We're going to still, you know, need to make sure that, you know, we're lending sensibly, I suppose, but it's not going to be a full application. So there will be minimal checks that will need to be done just off the back of us being a responsible lender. But, you know, the process will be quite simple for them to be able to extend that extra time.
Okay, perfect stuff. And can they switch rate? So can I go from a fusion? Can I go into a buy to let, or can I go into a commercial when I'm doing that extension? Or would I be staying on the bridge fusion?
Do you know what? I'm not sure because there wouldn't be any ERCs. So yeah, I suppose you could. I can't see
Yeah.
why there'd be any problem with that. So yes, I'm going to say I will check that. And if it's I will let you know.
You put
But
it
yeah,
out there.
as
You
far
put
as
it out there.
yeah.
Excellent. No, that's fine. That's fine. And then the final question I have over here. So again, anyone tuned in, if you've got any questions, any cases, send them across. Send them across now. Or we'll be wrapping up. So do look to get it across. But the product and the rate itself, then how is that working? What are the mechanics behind that? Because I saw it was the rate and then plus bank base rate
Yeah.
per
So
random. So how is that
it
working if bank base is going up and down, etc.? Is it effectively tracking it? How
Yes,
does
so
that
it's a
work?
tracker rate. So it will go up and down as sort of base rate, well, depending on which way it's moving. Hopefully as I said, it is only going to go down. I've got everything crossed as I say that. So obviously they're going to have the impact of reduced payments. I suppose there is always going to be that risk that if they start going up, then, you know, they're going to have to bear the brunt of higher payments. But, you know, hopefully there's a lot of speculation that interest rates will start coming down in August. So I think it is one of those, it's just fingers crossed. And then, you know, if somebody's going to go up with the fusion, it means that they can take advantage of it.
Excellent stuff. Excellent. I've got one extra one over here that's just come across. Any plans for 90% buy to let?
Not as far as I'm aware, but that's not to say it isn't going to happen. Obviously, you know, the department that design the products are always sort of talking, and as I said at the beginning, we're always looking to evolve. As far as I'm aware, no, but who knows what's around the corner.
Yeah.
If there is, it probably isn't going to be anytime soon. But you know, who knows? In maybe the next year or two, who knows? I suppose it just depends upon the market.
Yeah. Yeah. No, great stuff. Great stuff. Thank you. That's all the questions that I had over there and the questions that we had from that pre-reg as well. I'll be sending those across. So anything that we didn't kind of
Yes,
go over
thank
that
you.
was maybe very, very particular on a case, then we'll get that sent over to you and you can go back to the brokers directly on it. Hannah has just shared the link for Knowledge Bank. So for those of you that are listening in, if you've not registered with us, if you've never used us, give us a go. Give us a go. Jump onto the website, follow that link. You can register for a free 30-day trial. We don't ask for any bank details at the start, only once your 30 days are up. So it genuinely is no commitment and no concern of that payment coming out without you knowing. So jump on, have a go. MFS are on it across all the lending types that they operate in. And they do, like I say, have Notify, which, you know, they're one of our top users, top lenders in terms of the amount of users that are getting them involved in cases. So those hard to place cases, Notify is excellent for that, and it gives you an opportunity to speak with the lender directly on that, with the lender having all the criteria. So it's a great system to use. So please make sure you do log on for that. Just one, I suppose, for you, Emma, and also for those that were listening in. So one of the questions that we had pre-reg was, do you think borrowers are holding back until after the election before committing to property investments? It was actually probably closer than I thought it would be. I thought it'd be a resounding yes. It was probably closer, probably 60% saying that they are, with 40% saying that they're not holding and they are looking to go, which I think is interesting. I think on a residential aspect, we're hearing that a lot are waiting, you know, those are looking to buy their own home are waiting, but then commercially, it looks like commercially they're just going and making a decision. You know, great to hear, it'd be great to hear your thoughts on it, Emma. What do you think about that stat? What are you hearing from your brokers when you see them?
Definitely last year, I think everybody was holding on. But since the new year, we've been busy. We've been a lot busier than last year. So I think everybody just got to the point of it sort of now or never if they want to invest. Not to say that there aren't still people that are sort of watching the rates and watching to see what will happen and then sort of will do something as and when they start coming down. But, you know, things have definitely improved. Things are definitely a lot more buoyant. So, you know, it's moving in the right direction.
Mm. Yeah, no, definitely. We're seeing that, you know, in terms of searches on the system, you know, with 95,000 searches that we're seeing on the system month in, month out. So it's still out there. The business is still out there. People are still sourcing. Notify is telling us that deals are taking longer to place. You know, brokers are having the answers, yes, place it. They're having their invites to place through Notify, but then they're taking a really long time to come back in and accept it as placed. So, you know, we're seeing that lead time second because I think clients and brokers are looking further in advance for their solutions right now.
Yeah, definitely. I think there is a lot of that.
Great stuff. Great stuff. Listen, thank you very much for your time, Emma. Really appreciate it. That's been really informative and really enjoyed that session. I think it's a fantastic product that you've got. When I was broking, I used a lot of the bridge to let options, which I think this is, you know, similar to or kind of replacing in a way, which all giving a different option for, shall I say, not replacing, a different option for. But it's a lot of that. It was something that's very, very useful. So I'm sure there'll be a lot of take up on it. Good luck to you guys with it. But thanks for your time, Emma. Have a great one.
Thank you.
Great
Thanks.
stuff. Thank you all.
Bye.
Have a great day. Bye-bye.